Trade tensions have risen faster than the temperature in July, and yet, as you see, the Dow seeing another day of triple-digit gains, the best gains we've seen since early June, as a matter of fact. Could tariff troubles actually be helping the market set up for new highs? Bob Pisani and Mike Santoli standing by to ponder that very question at the New York Stock Exchange. Guys?
Well, let me just jump in. I think that at this stage, we've been living with the trade tensions for 4 months or something like that. They've waxed and waned, but they've been this constant annoyance and overhang on the market. And I do think it's gotten investors very defensive. So in that sense, the fact that you had sentiment kind of cool off a lot, that has set us up for this rally. Also, I think there's diminishing impact the longer we exist with these tariff threats. And then the threats always exceed the realities, at least to date. So I do think there's a chance that that has been the case. Also, if you look at where within the market the damage has been done, to industrials, for example, they went from a very big premium valuation to the market to a discount to the market now. So it's kind of relieved some of that pressure as well.
What I think is amazing is how much trade is still the marginal mover of sentiment for the market overall. The rally here is based on the idea that there was nothing more negative that happened over the weekend, not that we suddenly got rid of the trade war concerns. So look what I think is important. The growth areas still really matter here. So technology and financials are expected to have a very good quarter overall. Yes, we've got concerns about loan growth in financials, but overall, the growth still prevails over more defensive sectors, growth over lack of growth. And as long as market can levitate itself into believing that trade is going to work itself out, that those other marginal issues, the stronger dollar, somewhat higher interest rates, some concerns about rising input costs, remember that whole inflation story that's sitting there on the sideline? The market's kind of convinced themselves that they are not going to be overwhelmed by those problems. I think a lot of very good news is priced into the market right now.
Well, that's the question, right? We're here at a level of the S&P 500, 2780. We were here 3 weeks ago. It's basically been around the ceiling of the market since February. So we'll see if there's enough kind of oomph maybe with earnings to get us beyond that. But right now, I think all we've really done is see the laggard sectors lead, financials and industrials today. Tech sitting it out a little bit. And of course, emerging markets up about 1.5% today if you look at the EEM ETF.
All right, guys, thanks.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.